Obviously, some better performance for the NSC today. I think really inspired by good results coming out of the banks.
Yeah, that's true. We saw a bit of strong results from the banking sector. We saw the two banks release some strong upside in their EPS. We still expect much from the remaining banks, and we might see the market, actually we might see the market now exit its oversell position. The market has been in a long oversell position. It's a bearish run for the last 1 month. We might see it now troughing up. I mean, obviously buoyed by the trickling results going forward, you know.
Let's talk about the results we've just seen. KCB, the largest bank by assets, profits up 56% to 9.8 billion Kenyan shillings. We know they've got an extensive branch network and a heavy program of regional expansion.
KCB actually, I would say it beat market estimates for 2010. Returning a very strong 50% year-on-year upside on EPS, which is quite strong for that bank. And what we are saying that it can do more. There's much more headroom for the bank going forward. Regional presence, very strong regional presence, very strong core capital ratios, strong lending capacity. And they just raised 12.5 billion last year. This is just giving them additional capital boost. And we're saying that it can take on more huge and extensive capital projects. So bottom line, more great results, more headroom, you know, for the bank.
You talk about obviously they're increasing their loan books. They are cash flush. They can expand extensively into the region. We know that they've got mega projects in South Sudan. But I mean, all that infrastructure spend, particularly the technological spend that KCB has had to embark on, how much more cash can they bleed?
It's a question of fitting with the KCB risk profile. They got this huge capital expenditure projects. We see that they're trying to increase their presence in take up huge infrastructure projects coming up in South Sudan and Rwanda. Rwanda had just a very booming real estate sector. We are saying that they can still sweat much more out of that. So it's a question of just trying to improve on internal efficiencies for the bank. Yeah.
NIC Bank says their pre-tax profits are up 71%. Obviously, we've been expecting a dividend payout, and we know today it's 50 cents. What do you make of their results?
Very conservative model, very profitable model. What you're saying, although investors might have wanted more dividends, they paid the same dividends for the last 3 years. But look, hey, the bank wants to expand. They want to acquire a new IT platform. These are all huge capex expenditures, and they need to retain the money. So I think the investors just have to be patient with the bank. Still more growth coming from the bank. If you look at the risk profiles, it's a very risk-averse model, very risk-averse lending. And you're saying that this is really, really good for the bank. The asset spread, if you look at the asset book, the spread is quite within minimal risks.
It's reported today that some allowances have been made for CFC holdings. Despite having less than 1/3 domestic ownership, they're not going to have to be subject to stringent regulations by the Capital Markets Authority and can remain listed. Now, this is all to do with the consolidation that they've embarked on with Liberty Holdings in South Africa and also with CFC Stanbic. What do you make of this particular situation?
Obviously, from a market point of view, that will be a boost for CFC Holdings. The concept of demerger, you're not pretty sure how the insurance unit will perform without the bank, I mean, alone going forward. You know, this is a bit of, it could be a bit of uncharted territories for the insurance business. So, still more lead time for the bank, I mean, for the holdings, and it's given more time to work out sort of its in-house issues, you know. But I think from a market point of view, it's a good boost for the bank. It still has more lead time. You remember, the insurance business is a bit tight, you know. So many players, and having CFC Insurance going it alone might have been way above the mark, you know.
All right. Now, earlier on, we had referred to the fact that the shilling has felt a little bit of dollar pressure. Now, obviously, it's exogenous forces as well with regards to the global markets, but it also has a lot to do with the political situation in Kenya. What exactly is going on? We thought that after the referendum, all the various parties in the Grand Coalition were working well together.
We did a survey last week with top heads of treasuries, and they had a very, what do we say, sort of grim outlook for the shilling in 2011. They're all saying it will steady up above last year's levels, and we are seeing that, exactly that. And what you're saying, that a combination of factors come into play here. Politics, one major one. Of course, it's been compounded, the Middle East political upheaval, and we will see this going forward. But of course, politics has a big role. Depending on how the coalition politics are handled, we might see the shilling coming still under more pressure from the dollar going forward. We also saw the central bank for the first time in 2011 come to the market, made some purchases worth of 4 million euros. We just don't know how many times they'll keep coming to the market. But of course, you realize that the central bank has an inflation target of 5%, so they might want to keep coming to the market just to keep the shilling at some fixed level, you know. We have inflationary pressures coming, so they have to do something about it.
Another variable that will have bearing on the shilling, obviously, are tea prices, which are 3% down in January 2011 from the figures we'd seen in January 2010. Obviously, there was the Egyptian factor because Egypt is a major importer of Kenyan tea. But what else is having bearing on the tea prices?
The country is just witnessing a drought. The drought obviously is going to hamper the production output for the next few months. We also have the huge energy bill as a result of the political crisis in the Middle East. Well, crude prices are going to hover above 95 shillings. This is not good for tea. I remember yesterday, Sasini Tea sent out a very grim outlook for the next few months. You know, there's drought. There's a combination of tea, not the tea, a combination of energy, oil. This is going to impact on their business. And this is also going to impact on the output of the tea going forward, you know.